We've been speaking all morning about geopolitics driving world trade, and as you just heard, technology is a huge part of this. Artificial intelligence, robotics, the Internet of Things, they're here, they're making dramatic changes to the way we live, the way we work. The rise of blockchain and its ability to enable frictionless transactions, that has the potential to revolutionize global trade. Blockchain is just part of a wider technology picture in the FinTech space. It's moving at a rapid pace and it's reshaping industries. So in this session, we're going to look at some real-world examples of technology driving change in business and in trade and financial services through the creation of new digital ecosystems. And one key challenge of that, as Kai-Fu mentioned, is regulation. How do regulators keep pace with technical innovation? And in its attempts to do so, how do regulators not become impediments to innovation and to change? So, to introduce my panelists, Sopnendu Mohanty, who's Chief FinTech Officer, Monetary Authority of Singapore. Marcus Treacher, Senior Vice President, Customer Success at Ripple. Syed Shahid Hussain, Managing Partner, Financial Services Sector for ASEAN at IBM. And Kiren Kumar, who's Assistant Managing Director, Singapore Economic Development Board. Thank you for joining us. Sopnendu, I want to start with you, following on from the conversation with Kai-Fu. MAS put out guidance notes on AI, I believe, last week. Yes. Is that MAS recognizing that the changes are happening quickly? Is it positioning MAS and Singapore as a sort of thought leader in regulating this extraordinary new world of technology?
I think, well, thanks for having me. I had a large conference and I lost my voice.
There's a lot of that going around.
Yes, I think we got 40,000 people here. They're spreading the virus. So, I think one of the reasons why we thought we put a public consultation on the whole thing was that we started understanding the negative implication of privacy, transparency, accountability when it comes to data. And as I was listening to Kai-Fu, almost a year back, every Chinese company I met, they told me they're using AI for P2P, all this P2P lending. And today you look at, is a disaster in China. Almost a $200 billion industry collapsing like anything. So there is a risk of not managing this technology and what we understand, the privacy, the implication of accountability of data, which leads to the massive disaster what China just saw, in spite of AI being the core technologies drove that industry for last three to 4 years. So we are worried about that, and that's the reason we put it out there. And also, we got to acknowledge that there's another challenge happening as we see the whole policy across the globe around data localization. Almost there's a reverse thinking happening. Countries are getting nationalistic about data. They're telling my data, my country, stay in my country. If that starts happening, all the AI trying to take advantage of data will start struggling. In fact, I like where Kai-Fu put it out. The next breakthrough is small data.
Yes.
And how to rely on small data to make the next best thing available to the market. So that's the other thing to worry about.
Kai-Fu also said, Marcus, that financial services is where he is looking for investment, because that's where a lot of the change opportunity can come. Ripple's an active player in there. Give us a sense of where Ripple's come and what the market's like using blockchain for the transactions.
Yeah, certainly. So Ripple is a very interesting example of how you need to engage with today's world if you are going to change it. So we came out of the laboratory about 2 years ago, and we've been working with real banks, real payment companies worldwide, regulators, government bodies, and we've implemented real-world, active, value-add blockchain technology. We process payments today, tomorrow, around the world in microseconds, like the internet works. But we've achieved that by combining the innovation side, the Silicon Valley creativity, with hard graft. And I mean, to your point, it's only when you engage with today's world and you start to replumb and look at some of these really, unsexy, it's the word colorful, difficult problems that are embedded in the financial system around messaging, formats, local clearing. You fix those problems, you're working with governments and regulators to kind of redefine how things should be governed. That's where the value of new technology really can be applied. It's a combination of creativity and good old-fashioned hard graft and engineering to bring that creativity to market.
Shahid, I'm keen to talk to you about some of the real-world examples, as Marcus said, of where technology is being used in trade and in business. Let's start with blockchain first.
Okay.
There are various others we can talk about.
Sure.
But IBM has been working with Maersk and others about
exactly.
using blockchain.
Blockchain.
So tell us more about the successes and challenges of that.
Yes, so we have been working with the large client across the globe to apply not just blockchain, but IoT and API particularly, which is an unsung hero, I would say, and cognitive to develop new business models, right? And we have seen a lot of success. If I have to give some examples, for example, you spoke about Merck's trade lens, right? The impact is huge because if you look at almost $16 trillion US trade flows through shipping agencies, right? And if we put that trade on a very efficient and transparent platform, okay, our assessment is because of the cycle time reduction, because of the efficiency, we can unlock a value of almost $1.5 to $1.8 trillion. Right? That's a potential we see. And with the current capacity that we have, okay, we can serve additional 15% of the requirement. Just think of it that 80% of the things that we consume here in Singapore, 80% comes through one of the shipping companies. And 5% here and there will have a huge impact on the lifestyle in Singapore. So that's the impact, right? Similarly, if you look at other areas, but there are a lot of challenges as you ask about, what are the challenges in implementing these technologies, particularly the blockchain you spoke about. Okay, if you talk about maybe machine learning and API, they don't have so much impact on the basic business model, operating model. But blockchain in particular has a very huge impact on the business model, operating model, and value chain of the organization, right? Because the business model span across regulation because we are seeing industries merging. These business models span across countries, right? So how do you manage laws across countries? How you manage regulations across industries, right? Those are the big challenges that we are seeing. In fact, we were talking about a good blockchain use case for a utility, a banking utility in one of the countries in the region, and we formed a consortium and went to the regulator, and the regulator said that I want to own this platform, and there's a lack of clarity whether the regulator should be providing guidance or he should be owning the platform. Those gaps exist in making these technologies successful. So that's one challenge we are facing. And I think thanks to the team, Singapore government is much progressive, but other countries in the ASEAN are not keen. And one of the regulators is sitting with our proposal to create a blockchain platform of a shared KYC. That's the challenge we are facing. The other challenge we are facing why some of these technologies are not so successful as we were seeing 2 or 3 years ago was because there's lack of clarity on the governance, lack of clarity on the ownership, lack of clarity on the operating model, right? And when you talk about the IPs and confidentiality, because a lot of these technologies are available on cloud. If you look at IBM Hyperledger is available on cloud, IoT platforms are available on cloud, right? Cognitive technologies are available on cloud. But a lot of countries in the region don't allow you to put PII on cloud. So those are the other challenges we are facing in putting some of these technologies into a good innovative business model.
So a lot of it is around governance, regulation, and standardization.
Exactly.
Okay. Kiren, where are you looking for innovation now? Because it's part of your role. You know, blockchain is working, it's active, but what else is on your agenda?
So I think that's a great question, and I think you have a panel of experts in the finance and technology field. But more broadly speaking, I think we see the digital economy taking off in a very big way across Southeast Asia and ASEAN. Some stats, a 240 billion market in the next 5-6 years, 1.7 million new jobs, 600 million population, 350 million users of technology. Beyond finance, which is a huge growth theater that you've heard about, we see pockets of opportunities in some other areas. We speak a lot about data and flows and how AI can enable that, but we are talking a lot about consumer data and banking data. But if you unpack data, you see machine level data, business level data, and over there, the balkanization questions and rhetoric is a lot less. And I think over here, Singapore is well positioned to be a center node where global multinationals in manufacturing, in logistics, in FMCG, including banking, can actually play within a digital ecosystem that Singapore, enabled by technology partners, both fast-growing technology startups, unicorns, and also other technology suppliers like IBM, to really co-create new business models, new products, new services. But the clincher here is this, and we alluded to that. In the future, in the digital economy, the biggest challenge is how do the public and private sector come together to co-innovate? It's around the nexus of technology, business models, policy, and regulation coming together. And I think Singapore can play a role. The government can play a role to lean in beyond the basics that we've been doing to grow the ecosystem in terms of capabilities, infrastructure, and policy. I think the future is how can Singapore government be a partner with various sectors to actually innovate some of the spaces.
How can regulators be a partner in this? Because it is moving very quickly.
Absolutely. I think Syed's talked about the whole blockchain. We run the largest public-private partnership on blockchain program in Singapore. The reason we did it because for a technology like blockchain has to be pervasive, it has to be part of the public infrastructure. So sometimes the government has to take a big step in driving such initiative in a big public-private partnership program. And let me come back to Syed's point around, I think we need to be logical in the way we move the technology. 3 years back, when we started looking at technology as part of our strategic policy in Singapore, the first thing we looked at the API policy. Why that is critical before coming to blockchain and cloud? Because that significantly changes the architecture of the industry. Because the old-fashioned industry was enterprise architect. One single box, everything is built around that. Of course, IBM and Microsoft made a lot of money out of it. But keeping that aside, now it is distributed. Yeah. Now the APIs is forcing small companies to build great solution for a small value proposition. It's changing the business model dramatically. The second policy stance we took was around cloud. Because nobody's writing software for a physical data center. They're all written on a cloud-based architecture. So that's the second policy which Singapore government, MAS came and put together. Ravi Menon's famous speech, MAS has no objection to cloud. The third aspect is the blockchain, the distributed part of the data creation, because that almost answers the questions around the data residency issues we are struggling with now. If we can create a distributed platform where the data created at the respective jurisdiction can be kept there without necessarily being moved out to a centralized hub, I think that solves the data problem. And that's where we have come across and put a program, multiple banks, multiple partners working together to solve a few use cases. And the last space is the whole question around data.
Yes.
It's not necessary now with the latest technology to move the data. I can actually run algorithm without necessarily moving data at the site in a way the physical data doesn't have to be moved. But to have that construct in place, you got to get that A, API, B, blockchain, C, cloud, D, data, all in line. And that's where we come as a partner to the industry through some programs as Project Ubin. Recently, Prime Minister Modi launched in Singapore the largest public partnership on the APIs built by different FinTech to be plugged to banking system. Similar programs will drive adoption of technology while regulators are understanding the risk associated with such technology.
Marcus, working with regulators must be a key part of your development.
It is, yes. So we're creating an internet of value. That's our mission for payments and transacting worldwide. To make that happen, you have to have governance as well. So although the core magic dust in Ripple is blockchain technology, crypto technology, the real enabler has been creating a governance body, which we call the RippleNet Committee. And that is a member of leading banks, which are voted onto a governing body with a formal membership structure. It's a scheme, and it's the first one to be created internationally since SWIFT was created back in 1974. And that's really enabled us to engage with regulators, given us the kind of like gravitas within the industry so that we are not just a technology innovation company, we're also a credible, highly credible, effective community for cross-border payments in a whole new model. But you have to create that governance body. You have to create that engagement within which you can connect into the regulatory world. And that involves working with the banks and the lead organizations worldwide to form that structure. And that's how we've really got traction globally.
Just quick, I think all of us have heard about the sandbox framework. Yes. I think a lot of central bank regulators are putting together a sandbox framework which allows companies like Ripple to come to us, bring a business model, and we are going to provide that regulatory support as we understand the technology better. So that kind of fast tracks the whole process. The old-fashioned white paper, make policy, technology always ahead of you will now get reduced because of the sandbox framework.
So there will be a lag of sorts.
Absolutely. So you experiment with the industry, with technology, business model as they're getting built.
Yeah. Shahid, when we were speaking last night, we talked about certain things, digital ecosystems, but also new players versus incumbents and what incumbents are now doing. And you said something which I found fascinating, that some of the incumbent players are actually now doing more.
Exactly.
Having more success.
Exactly. So every year in IBM, we have a IBM Institute of Business Value, and we talk to CXOs and board members across the globe. And this year, we spoke to almost 12,000 CXOs. And in the last 4 or 5 years, all the CXOs said that fintechs were really going to disrupt the banking industry, and banks were supposed to stand up and listen. But this year, almost 72% of the CEOs and board members out of 12,000 said that it's fintech who are at number 4 in creating disruption, particularly in the financial services sector. And the real disruption in the last 2 years had come from the incumbents. That's the existing players in the industry, which was quite surprising for us. And then we started looking at the data. And then we realized that, to our surprise, that the investment from the PE and other organization in fintech is lowest in the last couple of years, in the last 40 years. That was one very interesting finding. And then we also start realizing why are incumbents doing much better than the fintechs in the last couple of years. And there were 2 reasons which really stand out. One reason was that it's a matter of survival. If you don't invest, you'll be not there. And the second important data which our earlier presenter spoke about was that data. Okay, 80% of the data still resides behind the firewall of the organizations, right? Only 20% of the data is with Twitters of the world or Facebook of the world. And incumbents, existing organizations have that advantage. And that's why you'll see that I was discussing with Marcus is that very small number of fintechs have been able to scale up, but very large number of incumbents have been able to come out with very strong operating model, business models. If you look at, let's say, WeTrade or TradeLens, or you look at, let's say, other large fintechs which are being formed by large organizations, by investment, or Everledger, or in India, if you look at India, I have been spending a lot of time there. One of the largest bank has created a very strong fintech, I would say, called Yono, which is not just a digital bank, but it's a financial superstore and it's an e-commerce platform. And they are acquiring almost 24,000 customers per day. Okay, so what we are seeing is correct, is that we are seeing incumbents coming back and striking back at the fintech and driving innovation, and we feel that it's a time for collaboration rather than competition between the incumbents and the fintech to drive innovation. So that's where we are seeing the collaboration between the incumbents and the fintech heading in future.
It depends how you define fintech.
Yeah.
I think
that is a very good point.
Is because the fintechs Syed is talking about is a B2C fintech, same customer base they're trying to attract. 80% of the fintech world is B2B. And a lot of PE firm VC firms don't understand those fintech well because they go by B2C models. They look for a number of customers, number of transactions. Ripple is a B2B fintech. They sit behind, they transform the systems from middle office, back office. Very hard for a PE and VC to make a sense of what is going on here. There's a long tail structure there. I think the disruption of fintech is not on the banks. The disruption of fintech is on the large tech company who have done a very poor job in solving the financial sector challenges. Look at this math. If you look at the revenue stream of large tech company, you pick any tech company, 40 to 50% of revenue comes from financial sector. Who has the worst technology? Banks.
Yeah.
How is possible the industry which pays the largest bill has the worst technology? So something is wrong in that construct. So that's the problem FinTech are trying to solve now. They're trying to solve the B2B infrastructure, back office, middle office, the processes behind getting simplified, the whole issue around cross-border payment. No tech company has solved it. I think finally we are getting some FinTech to look at it seriously and solving that problem.
You've been nodding furiously there.
Sorry,
Mark.
We've solved it, which is good.
There you go.
That's a very, very good point. I think we're a very good test case, I guess, to look at which kind of companies win and which companies struggle in this new world. And it's not about FinTech or large bank, as you say. It's really about mindset and energy. So we work with hundreds of banks and payment companies around the world. The guys that are moving quickest are the companies with real top-down engagement, senior drive, so they can apply their clout, their financial ability to do things generally differently. So working, for example, with Siam Commercial Bank, CIMB Malaysia signed on very recently, and Stan Chartered here in Singapore. And these ASEAN-based institutions work with us from the very top of the organization. So applying their clout, their capability, but in doing so, they're embracing innovation, change, dynamism. A lot of firms can't do that. A lot of firms find it very difficult to kind of galvanize and pull things together against one target. Yeah. So I think it's more about the kind of commercial animal you are versus your size that defines whether you're going to win in the 21st century or whether you're going to become history.
This is also a regional thing because ASEAN in particular seems to be a huge amount of money, the great potential, as you spoke of earlier, of the digital economy and ASEAN. None of the legacy systems in some cases, none of the legacy companies in some cases. So is it about region as well as about mindset?
Yes. So I think I agree with the discussion so far where incumbents are going to be the next wave where a lot of this innovation at scale will be implemented in different industries. A little known fact, if you look at any Fortune 500 company today and you ask them, where is your mandate for digital innovation? Most of them will say Silicon Valley, we have a little outpost. But the second largest concentration of Fortune 500 digital centers of excellence is in Singapore. And it's for a different reason. Asia is a large, fast-growing market. It's a fragmented market. They have decision-making mandates in Singapore because of the headquarters, but we also have a large and vibrant ecosystem that we can work with to implement at scale in a region and then scale it in the reverse innovation back to their global markets. So companies like Standard Chartered, DBS, you look at Visa, you look at Merck in pharmaceuticals, many of them have these centers over here where they put their mandates, capabilities, and budgets funded and supported by the senior management. And having a mindset of a fast-growing market, you need to innovate. Yeah. So I think these are some of the exciting things that we're seeing. Even companies like Google, which you would argue that are probably frontier in the technology space, has started a research and development center in Singapore, and they are focusing on the next billion user. They are also looking for growth. They know they need to innovate in the market for the market. So it's a very exciting time for us where you have a very diverse ecosystem in one location.
Shahid, you talk about business models. Is the region part of the equation?
Yes, certainly region is a part of equation, as you correctly said, is that the challenges are different in different parts, right? Singapore being more mature, and here the business model, the emerging models are more mature and advanced, and other countries in the region are trying to grapple with what model will work for them. So what you're saying is correct.
But there's a bit of a dispute, I guess, over defining financial services.
Yes, I don't think it's a dispute, but what we are saying, I think, is the same thing, is that what Marcus also said is that it's more of a collaboration and partnership. What banking community did was that I think they took customer for granted, and they left a lot of gap in their value proposition to the customer, right? They were not very proactive, and that's where FinTech identified a big opportunity and came and very aggressively started bridging the gaps, right? And then when the banking industry got up, they started focusing more on the front end, less on the back end. As he correctly said, a lot of innovation is happening on B2B as well. So yes, fintechs are doing well. It's not that they are not, but what I was trying to say is that incumbents have come and struck back, and they are driving innovation a lot because of the deep pockets they have and the data they have. And we feel that it's more of a collaboration partnership in the interest of the customer rather than competing with each other and trying to disrupt each other. That's how we see the industry emerging. As you said, he's partnering with the SCB, which is our customer, CIMB, so it's more of a partnership to bridge the gap.
But you're doing a lot of deals out here.
Loads. We're seeing, we work globally. We're seeing the most energy and drive in Southeast Asia, Middle East, South Asia. That's where the whole market is moving so quickly. There's almost a singularity of growth, energy, dynamism, investment, can-do mentality around the Asia region. And we're seeing most of our groundbreaking innovation happening here. And it's actually working with some of these really fast-moving organizations which are future-looking and looking to change things for the better.
Right. Let's open it up now to the audience. We're very interested in your questions and your comments and your observations about this issue. Please just put your hand in the air and we'll bring a microphone around. First question, please, right over there.
Thank you. This is Hong Patterson from Royal Bank of Canada. I think we've talked a little bit about the social impact in terms of the job displacement. I did have a question, particularly for EDC and for MAS, in terms of the social responsibilities and your thoughts around the social responsibilities and the regulatory potential in terms of thinking about and the programming. So we talked about the correlation and looking at facts and correlation around facts. I think facts are easy to acknowledge. Correlation of the facts can have biases. So if you could give us your thoughts around the biases and how you manage that, given that a lot of the programmers, coders, are predominantly homogenous.
That's a great question, very complex question to answer here. I think it's a very, I think part of our design, if you look at our sandbox program, there are 3 principles which we apply for anybody trying to experiment on a new model. Is first, it has to be embedded in a new technology, and second, it should have a value system. It should be something beneficial to the society, or else we'll not do that as part of the program. And third, there should be a strong sense of neutrality in some of these biases we are talking here, because you're absolutely right. We can end up in a massive skew. It's a China example of P2P. Why it became a disaster? It because people because there is a perception that AI is making the right choice, and what happened after a year, the AI had no clue whom they're making decisions on whose behalf, whom to give the lending choices. So you're right, we should be very careful. That's the reason why MAS came up with this new policy paper around FEAT, fairness, ethics, accountability, and transparency when using data and machine learning.
Yeah. Is it, you build this into your business models when you're working with clients?
Yes, we certainly take care of that, yeah.
Yeah. In what way? Do you find businesses are keen to do so, or that this is an essential part of the ultimate success of a business model?
See, when we build new business model, we look from all perspective, right? We look from the governance perspective, because if, as Marcus said, if the governance is not right, those business model will not successful, right? Then we also look from a regulation perspective. We look from, let's say, ownership perspective, revenue model perspective, and also how is it going to impact the organization, how people need to be retrained and redeployed in a meaningful way. Right? So from all aspects, we see when we try to bring about transformative changes or build new business model for the organization.
Okay. Next question, please. Steve.
Thanks, Michael. Stephen Marcelino from Accenture Strategy. Great panel talking fintech and also incumbent. But within the financial services, what we're seeing, the big major tech firms such as BAT, Baidu, Alibaba, Tencent, starting to enter financial services. Many firms also expected the American GAFA are also likely to do so. What would be the take from the panel on the likely disruption impacts and how this may shift the digital the digital ecosystems created in different markets? Do you anticipate some some of these major tech firms enter different markets sooner than later, we could. Thank you.
Let's start with you.
Yeah. So I think the point you have raised is very, very valid, and banks have recognized that, right? We were with the Central Bank of Malaysia last week, and they were really, I think, one of the FinTech boss had come and met the Prime Minister, and he wanted to get into the Malaysian market big time, and the regulator was quite concerned, right? So we see digital giants entering the financial services space, okay, in one way or the other, and governments may not be able to stop them in a big way. So financial services organizations have recognized that, and financial services organizations are going to face two challenges when these organizations are allowed to enter the market. One thing is that most of us are hooked on these platforms, right? How much time we spend on Facebook, Twitter, and Amazon, right? And one of the challenges that financial market will face is that how to get their target customer off this platform and get on their platform to ask for a loan. That will be one of the biggest challenge which financial services organization will face, and they are recognizing that. The other big challenge that financial services organization will face from these digital giants will be the ROE and the cost to income ratio at which they operate. Even if you look at banks in Singapore, they're operating at a cost to income ratio of 40, 45, 50. If you go to maybe Vietnam, they are operating at a better cost to income ratio of 27 to 35. Again, in Malaysia, Indonesia, the cost to income ratio are between 40 to 45. And if you look at these digital giants, they're operating at a cost to income ratio of 20, 25, 30, and they are giving a ROE to their shareholders, which is almost 20, 25%, whereas the average ROE of traditional bank is around 9 to 12%. So these are the two biggest challenges that banks are going to face, and banks have started building a defensive business model as we speak, right? Just to give you an example, I was talking about SBI in India, right? So what we have done with them is we have worked with them to build a digital bank, plus a financial superstore, plus an e-commerce platform where we are orchestrating almost 75 e-commerce companies. So what SBI wants is with 300 million customer base, they want people to get up in the morning and not to log on to, let's say, a Facebook or Amazon, but they want to log on to their platform. And they are offering Amazon product on their platform. Okay, they are driving almost 0.1 million traffic from their platform to Amazon and giving them better offers. We are working with a client in Indonesia, one of the large non-banking financial services, and they know that they can also be disrupted by one of the FinTech. If let's say Grab is offering loan, tomorrow they can get into offering automobile loan as well. So they're also trying to create an ecosystem and a platform, and they are trying to build, let's say, ecosystem and a platform around, let's say, home ecosystem, health ecosystem, education ecosystem, and create a partnership so that they can go beyond a point solution offering, but meet the end-to-end need of a customer, whether it's life event related or lifestyle related. So financial services organizations are recognizing that. They have woken up and they are building a defensive business model, operating model, which will compete with the likes of, let's say, Alipay in terms of the customer experience and customer engagement, in terms of cost to income ratio, as well as in terms of return of equity that they will give to the shareholders.
Kiren.
I think payments is one big area, but I think payments at the end of the day is a means to an end. What we are seeing is two big trends. One is the digital giants of the US, your Facebooks, Googles, Amazon, and the Chinese, mainly Alibaba and Tencent, descending into ASEAN in a very big way.
Big way, yeah.
There are two subtle differences, I mean, not generic, but just subtly. The Americans are coming in organically trying to grow their business. The Chinese are coming in by acquiring and partnering with different companies. So I think that's one big trend. I think everybody sees that. So these are stylistic differences in how they come into the market. The second part is that I think there's another point here. We're talking about financial services and how they will respond. But if payment is a means to an end, who is the one delivering the value in the end? So actually there's super apps forming within Southeast Asia, the likes of Tokopedia for e-commerce, Lazada, Grab, Gojek. These are becoming very powerful platforms that owns the consumer for every service, and payment is but a transaction platform. The banking system never had that sort of a structure. So I think one of the structural shifts that we're seeing is that. And then the question is, how does that actually change the game in Southeast Asia?
It's on here.
The Alibaba model outside China will not work in this market because this market at least expects interoperability. So there will be not a single dominant player running this market unless they acquire a lot of customers organically within the country. What will happen is the technology arm of those companies will go and provide the services to these banks in those markets to make their own productivity, efficiency grow better. The second challenge will be around what I think is the biggest challenge around is the payment. What seems to be an opportunity will not be an opportunity in the long run. What you see in Singapore, where today in Singapore, if I have to send money from A account to B account, it is 3 clicks, 0 cost. You can't make money out of that anymore. So a lot of this emerging market in ASEAN countries will build payment infrastructure which will be cheaper and be faster. And I think there's no money to be made in those space. What you will see as a model, as you see Ping An launching One Connect, they're technology company, pure technology company trying to provide alternate technology services to those banks. That's the partnership we'll see, but I don't see a direct business model going to the market competing against the local financial services till they come with the new interoperable models.
Marcus.
Yeah, I think the winners will be regulated. So I think the regulatory world around financial services will still very much be there in future. I do think, though, that we are going through a tipping point, and we are seeing a lot of very successful organizations win in the market by doing one thing really well: payment companies, analytical companies, investment companies. So we can see the kind of defragmentation of the universal banking model really kicking in. We can also see defragmentation of these global behemoths that cover many, many markets. And we can see, certainly with data concerns and data protection, the future will be a world where many, many specialized service providers, whether they're banks, payment companies, shipping companies, manufacturers, robotics, will interconnect together in a web of commerce. That's really where we think it's heading. Volumes will be massive, billions and billions. There should be 50 billion or so, give or take a few, unattended devices plugged into the internet by 2020. They will start acting. You'll have KYT, know your thing, versus KYC, your customer. Yeah. And in that world, and I can link to that idea of the digital banks that have cost-income ratios which are off the Richter scale, as you said. These players, if we roll forward 15, 20 years, will be regulated. They'll be part of communities that meet like we're doing today. But the models, the dynamics will be very, very different. There are no shipping companies that today own airlines. The shipping companies never made that transition to flying rather than sailing around the world. It's very difficult for existing successful companies to make those shifts and to recognize when the tipping point is here. So many of the large players in the financial services world today, I'd argue, would struggle to compete in the 5 to 10 years in the future. And the top 10 of 2020 are probably not on the circuit today.
Just to repeat, the stronger data regulation will actually change the business model. It will be very tough for the Alibaba model will work in this market.
Okay. Look, I'm afraid we have to leave it there because we're out of time. Fascinating discussion. There's so much happening in this space. We'll continue to follow it at Asia. So much happening in this region, in this space in particular. So please join me in thanking our speakers, Marcus Treacher, Sopnendu Mohanty, Shahid, Hussain, and Kiren Kumar.